Hello and welcome again to Money Tips. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. Today I want to talk about the pound, and if you live in the UK, you'd have noticed that the pound has been kind of sliding since Brexit, and actually went down a little bit more today with all the news going on about Brexit and worries that we're not going to get a Brexit deal. So the pound has gone down. When we say it slides, it's gone down a little bit more than it was. It's already quite low. So if you go into Europe, you're virtually getting a £1 for a euro, and if you go to America, things seem more expensive than anywhere really now. So it's not great news, but hopefully they will be able to come out with a deal in October. But the European negotiator Barnier said no, we're not going to have a deal. So let's see, or he said there's no concrete proposals that we accept. But there does seem to be a bit of an opening. I was at a meeting last night where a senior minister is hopeful that we will get a deal. So let's see what happens. And just to sort of round up on the week's news that we've talked about this week, that Thomas Cook, of course, went bust. Other companies now are talking about profit warnings, BA, Pearson Group and so on. And it's not a good time for the British economy this year. 2,800 shops have closed down in the first 6 months. So we'll have to see how things go after Brexit. And then I did a story on the 24th about more recession signs. There's more warnings of recession signs in the markets. And these are the way the markets are reacting. And I think you should just keep an eye out for that and not get into a situation where you could be caught in a recession, where you have too many debts around your neck, too many personal debts. So is it the time to go out and get that expensive lease on a new car? That's up to you. You've got to take your own advice on that. But in a recession, that's the time when people lose jobs, hours are cut, money is tight, and that's when you could be stuck with these big commitments and not be able to pay them. Then yesterday we talked about index tracking funds. A lot of people have got their money tied up or their savings tied up in index tracking funds, which are funds that track the various indexes in the stock market. And yeah, they seem quite safe because they've done quite well. But don't forget, over the last 10 or 12 years, we've had a relatively upward moving market, a market which you could call a bull market. The market has been rising. But if that market goes down, the index tracking funds will go down with it. And it might not be your savings, it could be your pension scheme is in a similar kind of stock market based fund. And the man that Michael Burry, the man who was one of the characters featured in the Big Short movie, he wasn't in the movie, but he was one of the main characters in the movie. He said that index tracking funds are not safe because too much money is indexed to those funds. And that means that those funds could cause, he's saying it's going to cause a complete financial crash because of the amount of money going into those funds. So check out that's on my website, moneytipsdaily.com, and see what you think about index tracking funds now. Obviously, a lot of other people are in managed funds where they're in managed unit trusts, managed pension funds or mutual funds, and their money is also tied up in the stock market. So you've got to look at this. The stock market's been going up for a long time, and I think, and a lot of other commentators think that it is due for a correction. And the two of the biggest investors in the world, Warren Buffett and Charlie Munger, are just not buying anything. They haven't bought very much for the last couple of years because they don't see anything of value. Stock prices are going up and up and up because too much money is piling into them from pension funds and institutional investors, and that of course pushes the prices up. But are those stocks and are the companies underlying those stocks really worth what people are paying for them? I don't think so. It's like when there's a property boom. Everybody's out scrambling to buy properties and they're going up in price. It doesn't mean that that's the real value of it. It just means that prices are going up because everyone's rushing in to buy them. So I would be very careful about investing in the stock market. And I would go and see your financial advisor, see if any of your money is tied up in the stock market, like your pension fund money, and maybe look at other ways of doing things. We also talked about this week creative finance tools for owning or controlling property. Now, a lot of people think you have to buy a property to make any money out of property. which is not really true. There are many ways of owning property, controlling property without necessarily owning it and buying it. When you buy a property, you have to pay a lot of money in stamp duty and taxes and legal fees, which can sometimes be 20, 30, 40,000 pounds. And that money is just dead money. It goes to the government. Whereas if you can use other strategies to maybe control properties through options, and these can be taught to you, then you can make money from property without necessarily owning it. You can also own it in the future. You can have an option on a property and sell that property without ever owning it. A lot of people think you have to own the property, you have to physically complete on the deal, then you can sell it on. But of course, once you've completed on the deal, you've paid so much money in tax that often the value on flipping that property could just be, your profit on that could be wiped out by a lot of the taxes and the costs. So think about that. If you are interested in learning more about creative financing tools and ways of owning, controlling, leasing properties without any money down and making money from property with no money down, just drop me a line on Facebook Messenger or at charles@charleskelly.net. So thanks for tuning in. I'm moving now to a 5-day week broadcast rather than doing Saturdays and Sundays where not many people are really listening to podcasts on my platform. So I'm moving now to a 5-day week where I'll be doing broadcasts Monday to Friday and then checking in at various times on Facebook Live. So thanks very much for listening. This is Charles Kelly. Check out my Money Tips podcast on moneytipsdaily.com or on iTunes. There's new episodes out today. And thanks for tuning in. For all the people on Facebook, just saying hi to, I was giving a little wave to people who tuned in. Thanks for listening, and I will speak to you very soon. Thank you. Have a great weekend.